If it reaches here, right here, this is the baseline, then you can expect it to come back into 8, that 4100, give or take, and that breaches expected to come back into 4098, then probably a bounce right about here, 4096, then mean reversion at 4094, 4095 area, right? So that as of now, that's the case. And to the upside, 4110, then probably 4115 area, right? Unless it clears that, there's no real reason to look for an upside. And if it does clear there, then you can expect it to hit the third standard, then probably go up 4123, and probably into 4128 to 4130, 200 moving average on the hour. And not plotting anything above the 200 moving average on the hour today. However, look at this thing; it will hit the third standard deviation right here at about 4118 to 4120. So yeah, and if that clears, then we're looking forward for a push all the way up into 4128, 4130, 200 moving average on the hour. As of now, nothing beyond that. As of now, I'm not really seeing anything beyond that, and we'll take a look on the higher time frames. To the downside, the mean, and the mean reversion completes, then we can expect it to come back perhaps into 4090. As of now, plotting nothing below there, but if that breaches, then very likely we will see a 4084. And it should hold. 4084 should hold pretty decent. If that breaches for some reason, then we are expecting it to come back into 4077 area on ES. So that means you can subtract another 10 points from ES. 4077 would would leave us with 4067, 4065 area for SPX, right? So as of now, for the next half an hour, once the market opens, for the after the market opens, then I'll watch this chart for another half an hour before we switch into SPX. Cool. All right, so that's the immediate trade. Now let's go here. Now this is very familiar to everybody, right? This is very familiar to everybody. Goes up, hits a second standard deviation or a major moving average, gets overbought, pushes down, hits the 5, and it is waiting for it to come back down and hit the 8. That is the reason it is holding this 4077 area pretty decent. The 5 on the week. If that breaches, then we're expecting it to come back into the 8 on the week, which is about 4051. That would place about 1.5%, give or take, right? 41 point would be 1%. Then probably from there another 10 points would be 1.2%, 1.1 to 1.2%. Probably that's the day we are looking at, the 5. However, if that comes back down and breaches there, expecting it to push down here into this number, 4022, definitely not plotting anything sub 42. And this would be a hard ask if that's a 2% move. I don't believe it's going to happen, but just in case it comes back down to there, then probably, that not plotting anything sub 4020. That's again a 20% move. Sorry, 2% move. Ideally, I think it should not breach this 4080 today, 0.5%. If that breaches, that's 0.5%, 4078 area. If that breaches, then probably we'll add another 0.5%, go for it up to 40. Let's take give or take about 4050. Right. So that means 4040 on SPX. Not plotting anything sub 4040. Now this chart is interesting, right? Now this chart is very interesting actually. Not just interesting, it is very interesting. Look at this thing here. We got a crossover. Obviously, this there was an Apple crossover, and then you had Microsoft crossover, then you had Tesla, then you had SPX crossover. Right, fair enough. Now this thing is crossing to the downside. Magda is crossing to the downside. And however, look at this thing. This thing has hit the bottom and trying to bounce just like this. Bounce here, it is trying to bounce. So this is a very inconclusive chart. And so we want to stick within this range. And that's the reason it makes sense to watch SPX. We want to see this range break out 4112, 4115 to the upside, and be very cautious and be very patient with this breakout. Could be a quick breakout and come back down because we are not the only ones who are seeing this, right? And pretty much everybody who watches the technicals, this is one of the most relied upon technical, the MACD, and people are watching this technical. So it has given a crossover to the downside. Now, how much of a downside will it go? Will it give a half a cycle or will it go full cycle sub zero line? If it does go sub zero line, probably we are looking at 3800, and that's probably a story for a CPI. Even though so even though let's say even though a CPI comes in hotter than expected and probably it pushes down maybe a few percentage points. However, given the strong labor market, I don't think that that would lead to new lows. Probably that dip would be bought, right? So be careful of that. Now to the upside, this is what we are watching: the 5 and 8 on the daily. If that breaches about 41.15, give or take, then we will reassess it into all the way into 41.40. Uh, Rather not 41.40 immediately, but you want to see this thing come up here, 41.15, breach that, then we'll reassess 41.20, and we'll reassess 41.23, then we'll reassess up to 41.28, 41.30. Right, so that's the way it's going to go. But if it does clear here, 41.28 to 41.30 area, then very likely it's going to go hit this number, about 41.40 area. Cool thing. Now to the downside, we want to see it come back down, breach this 4100. Very likely it will breach that 4100, and we want to see it come back down into 4072. Actually, this would be a hard ask. Why? Because you have this guy right here. So this thing. So this is what is happening with Apple. Right? It's trying to bounce the 50 moving average here, then the 100 moving average here. Unless these two break, there's no reason for us to look for the downside. And this line right here, 147.50, should hold for Apple, right? And why am I looking at that line? Because I think MACD is about to cross over here. So if the MACD crosses over here, then very likely the position traders will exit that trade, and very likely it will start to come back down here into 147.50. If this gives up, let's say if it right now it's holding this line pretty decent here. So the first move would be probably it will try to do this 150, 150, 150, 160. That breaches, then we'll look for further upside. If not, it'll come back down again. There's this one standard deviation, come back into the 8 here at 150.34. As of now, that's the 8, and as of now, this is the 5. However, as the market opens, as the data starts to come in, these 5 and 8 will adjust, and we will adjust our readings accordingly. However, this line will still act as pretty decent support to the downside, 147.56. As of now, that's where it is sitting. And if it does come back down and breach that number, that's when I'll start to look for further downside. However, as of now, I'm not looking forward for that line to get tested. However, I'm repeating that again. If it comes back down in a hurry to test this number, I'll be looking for a clear bounce right here. Why? Because this guy, look at this guy, it is almost hitting the, or rather hitting the bottom right here. So we might get this bounce again, right? So looking forward for that. Cool thing. And let's go here on this chart. Yeah, this chart is again a bit of a mess. However, let's see we can. Well, this push to the upside from Friday, we were pretty clear about it. The MFI was hitting the bottom, and we knew it was going to bounce oversold conditions, and it did what it did. And to the upside, we are still looking forward for a push all the way up into 150, 180. That clears, expecting it to push into 152.30 into 152.20. As of now, not plotting anything above the 50 moving average on the hour. However, in case if it does clear, then we are expecting it to move all the way up here at 153, and not expecting anything to move above that as of now, right? Uh, I that's the upside. That's the upside. First, if it clears here, the 50 EMA 151.37, that would that that I think should act as pretty decent resistance itself. But if that clears, then we're looking forward to hit this 150, 170, 150, 180. That clears, we're looking forward to the 50 moving average on the hour to get tested. Not really plotting anything above this line here. However, if it does clear there, then we'll reassess it into 152.97, 153. And to the downside, we are due for, I think, a mean reversion. However, the same thing, 5, 8, that reaches the major moving average here is the 100 moving average. I think if that clears 150.80, we'll look for another bounce here. That breaches the mean reversion will happen about 158.60, 150.68. Sorry, if that breaches, very likely is going to come back down into 150.40. Again, this chart and and the daily chart both are inconclusive. We want to see the price action before we get into a clear trade, because this is not a clear trade. This was a clear trade to the upside. Look at this chart. This technical. This is overbought, and that's the reason I'm saying either it needs to hit this to come back down, or this to come back down, or this to come back down. By the time, let's say if it does go up all the way here to 152, the 50 moving average on the hour, very likely it will get pushed down because it will get really overbought here, right? And the SMI is still crossed to the downside, and so that's the reason I'm still looking for that downside. Uh, a bounce at 8, bounce at 100, bounce at this mean on the hour, then probably bounce right about here 150.45. Today, I think it will be a probably a percentage, 1% day, or even less than a percent day. Very choppy, I think. But let's reassess how it goes. Let's get into this thing, right? And one quick question: everybody here understands the relationship between, what does it say, Darth? What about weekly RSI Apple? Yeah, let's look into that. Everybody understand the relationship between stock prices, interest rates, and the labor market, right? Everybody understands that. We talk about that every single day, probably, right? Everybody understands that. That's crystal clear. I'm assuming that because I did not get an answer, so I'm assuming that. So the way that it works is interest rates, drive pretty much everything, and interest rates are in part driven by the mandate of full employment. That's one of the mandates of inflation and unemployment. Those are two mandates. But right now, inflation is focused, not the unemployment picture. So the Fed will keep raising interest rates until the job markets or the employment number goes up. In this case, I'm looking at about 4% to 4.5% as of now. And on the flip side of things, which is the interest rate side of things, we're expecting it to hit at least 5.5. So till the time interest rates go up to 5.5, which is pretty much the market is expecting, I think the market will be able to easily absorb that, probably a couple of 100 points. Let's put that in terms of percentages. Probably a point, probably a 5% push to the downside. Maybe that's also a maybe, but let's say 5.5 interest rates hit 5.5, then probably that's where things will start to wobble a bit. However, I'm still not looking for that death, mega death, or any situation unless unless the Fed goes above 5.5 and we start to see that unemployment number tick up meaningfully till 4%. I think unemployment. I think Fed will be okay. The economy will be okay. Everybody will be paying their overdues and whatnot, notices and everything. I think everything will be calm till 4%. I think once the 4% on the unemployment number hits that 4% and goes beyond 4%, that's where you'll start to see some of those defaults start to happen in the unsecured debt side of things. Once that probably unsecured debt kind of starts to get shaky, probably that's where you'll start to see that people start to make cuts on that secure debt, like a used car or a home loan or something like that. So till that time, I think the unemployment figure hits the 4%, 4% plus, and on the other side of things, the interest rate hits 5.5%. I think the markets will be easily able to absorb any shocks. And I'm saying this because tomorrow's CPI number might be a knee-jerk reaction, probably to the downside. I don't know that. However, let's say if I think the expectation right now is 6.2, and probably you can add 1% or 1% on SPX, 1% move on SPX for every point basis point upside or downside, variation in that 6.2. Let's say 6.3, 6.4, 6.5. You can keep adding 1% to SPX there. Or to the downside, let's say it goes 6.1, 6.0, or 5 point something, then you can simply add 1% move onto SPX on in the direction of the CPI number. You say knee-jerk, what do you mean? Immediate, right? Immediate. Let's say CPI comes in probably, let's say 6.3, right? So you might see a immediate reaction to the downside, probably with 2%, and then I think the dip will be bought after CPI, probably not, if not immediately, then probably next week. What I'm trying to say is the economy right now is in great shape, right? At least according to the numbers. So we go by the numbers, unless the numbers start to differ meaningfully. We go by the numbers, and it's not just us. Everybody else, who's the market participants looking at mathematics to figure out their investment strategies, all of them go by numbers. And especially right now, the reason I'm bringing out all of these points is that I know we should be talking technicals, but the thing is, let's say you're a money manager, right? And you are sitting in cash by and large. Let's say 50% cash. Now you are not getting paid to sit on that cash. You need to be able to deploy. That's your profession, right? That's your profession. You are expected to deal with that uncertainty, and that's what you're getting paid for. And you cannot sit on that cash, and you need to deploy that cash either into the bond side of things, or you need to get into risk assets, right? So right now probably crypto is very much ruled out, uh, unless you are an individual money manager of sort of things. But right now, crypto is pretty much ruled out. So where will the money go? Either in stocks or bonds. Uh, Bonds very likely, because the yields are expected to increase, and probably 5.5% is okay as of now. And then probably stocks, because the unemployment number is still in within the lows, probably historic lows, right? So till that time, the unemployment number comes up to 4+ percent. I think I am okay with the stock market. I'm okay with investing in the stock market. The market will be in a very Goldilocks sort of environment. I think probably to the downside about 38, probably to the upside about 44, right? So pretty much, I think the game will be played within those two numbers. And 44 would be probably once it clears that 42 threshold, 42.50, then we are looking at 44. Otherwise, not really much. So this Goldilocks zone, about from 38 downside roughly to 44 upside roughly, I think that will be probably that's where a lot of money will be made within this market, uh, and I think very much the retail is kind of trying to gamble this again, and very much I think the retail will get hurt because of the range bound nature of this current market, right? And when are we looking to break the range? When either the interest rate is above 5.5, or the unemployment is above that 4%. And the third thing that almost everybody knows about it, the inflation. Inflation right now expected to about 6.2, and if the inflation, I am expecting the inflation to come back down to about 5% going forward. Not this CPI, but probably next to next CPI. I think we'll see the 5.5% on inflation. So that's the reason I'm still looking forward for that upside, and that's the reason I'm saying even if the tomorrow CPI comes in hotter than expected, the market moves lower, but that dip will be bought. That's what I'm trying to say. Cool thing. Now let's get back to technicals here. So this line here, 3.75, we were expecting a hit of 3.75. We got that. 3.65, somewhere about here. We were looking for that bounce. 10-point bounce, we got that. Now if it clears, this was expected here. Take a breather. Now if it comes back up, clears that, we're expecting another 10 points to the upside. Probably 3.84 is what I'm looking at, right? That breaches, then we'll reassess probably upside here into 3.97 or something. However, right now the market is not really expecting it to be probably not more than this number, 3.84. Probably the game will be played within to the downside, the 5 and 8, to the upside probably this 3.85. This is where I think the game will be played. And if you don't want to watch this number, go down to this number here, DXY, and we are still tracking it to hit this number here. And I think this is what we were expecting. There you go. This is the number that I'm still expecting it to hit. 104.5. Yeah, let's roughly at 104.5. So give or take another about, let's say, a dollar 90 cents to a dollar to the upside. Hopefully we get that. And let's say if let's say we are correct about this, and that's not coming from this chart. However, this chart is simply detached from its 5, so I'm expecting it to go up and test that 5 again, and the upside momentum will come from this chart, right? This is still oversold, and we got a crossover to the upside. And very likely, if it clears here, we're gonna hit this number, 14.12. That clears, very likely is going to push all the way up here into probably 104.70. However, we are not, our base case is not 104.70. We want to see it get 104.50 area, and then we exit that trade. And probably after that, if it does clear that 104.5, 104.6, then probably we'll look for this 104.70 and probably end up somewhere here at 105.26 area. However, as of now, that is not. If you want to see why I'm not sure about that path, this guy, right? So, and we want to see this thing move below here, right? And we want to see this thing move below here. And if it does move below here, 100 with the 50 moving average, this is FX5, by the way, yen. This is what is creating the downward pressure or on the dollar. See this run here, right? This is what created the downward pressure on dollar, and that's why the dollar peaked. Pretty much, by and large. Not saying this is the only reason, but by and large, this is the reason. And if yen gets pushed to the downside, you will see dollar come back up again. And this is the number that yen has to hold, right? 69.98, somewhere about here. Let's give or take 69. Let's say 69.90. We want to see this above here. And by the time it hits this number, very likely the RSI will be oversold here. At least we'll get a bounce, right? And however, after that bounce, if it comes back down and breaches this number and starts to move to the downside, right about here, 69.35, you will see DXY moving up. Cool. So if you want to front run DXY, you want to watch this number here, FXY. All right, and that will add a layer of complication. But if you don't want to do it, that's fine too. Right, and yeah, I'm looking for that for a push all the way up here first. 104.17, 104.20, that clears. Then we're looking for a push all the way into 104.50. Cool. Uh, yeah, it's hitting this resistance. Fair enough. Oh, probably a breather down into 3.68, and if it does take a breather, obviously you'll start to see the ES push up. Then if it starts to breach below here, then we'll start to reassess to the downside. However, if it starts to push to the upside here, you'll see the DXY start to push upside along with it. Right, it is hitting the resistance right now. Right. So we want to see it above this resistance to plot any further upside, probably 103.95 and probably 104.12 area. Cool thing. Anything in particular? Let's get into Tesla. Tesla is. Do we want to see Microsoft, or everybody can figure that out on their own? I'm assuming this is not a complicated one at all. Uh, right. 5 8. Nothing. You know, there's nothing out. Unclear about this thing. It is just bouncing off of its eight. Nothing there. This chart. This is interesting here. So overbought sign, right? This oversold, ran up, overbought, starting to come back down. Now here, breach the 5, breach the 8. If that breaches, this is the number 187.28. If that breaches, it's going to come back down here into probably 176. However, the more delay it does at the 5 and the 8 and probably the 100 moving average, you see this thing here, it will be hitting the bottom. By the time it hits the bottom, we are ready for a bounce again. Cool. So that's what I'm watching for Tesla. And let's go here for Tesla. Where's Tesla? Right here, Tesla. Right. This is what I was expecting it to happen. Well, now it should have bounced somewhere about here, right? But there was no major moving average on the higher time frame, so it started to push lower. But here, if it starts to cross to the upside again, I'll start to look for an upside. First, okay, it is hitting that 5, and that 5 clears, then we're expecting it to hit the 8 at 195.65, 195.70. That clears, very likely is going to come back up. 197, and the mean is sitting all the way up here, 199.76. Probably if Apple starts to push to the upside, then 250. Basically, this is what I'm looking at, the 50 moving average on the R, right, to the upside. And this is the path if it starts to take. Obviously, it's going to hit this number and start to take a breather. Then if it comes back here and clears that, then we are looking forward for further upside, then further upside. Let's go here for Tesla. Right. Yeah, to the downside, very likely this is the number 18675. But still, this chart looks really cool. This chart looks really cool. Maybe maybe in the short while it might come back down. Tomorrow CPI might push it down. However, even if it comes back down, I think this dip will be bought probably even till here, 167 area. This dip will be bought. Right now, the five is sitting right about here, 172.90 area. If that breaches, very likely 168, it will. And if CPI comes in harder than expected, that's when it will start to move lower. If not, I don't think it's going to move lower. We still have this crossover to the upside. Very likely, I am sitting at Tesla here, right? 225, 226. This is where I'm sitting for Tesla. Very likely, if it bounces here this time, then we're going to see this get tested about 226. If the CPI comes in lighter than expected, that depends on how much lighter. Probably, let's say 2 to 3 points lighter, and very likely you'll see about 3%, 1 to 3% move to the upside, depending on how many points. And that's the math I'm looking at. Depending on how many points, surprise either to the upside or to the downside the CPI will have, probably will need to add or subtract those many one percenters on SPX. Cool thing. Anything else in particular we are looking at? VIX probably not worth mentioning, but we'll look at VIX throughout the day, right? I'll keep updating VIX throughout the day. However, the 5 is sitting all the way here at 2045 for VIX, and it is right now hitting the second standard deviation, and trying to bounce. It violated the second standard deviation, so it made sense for it to come back down. If it breaches the second standard deviation, very likely it's going to come back down here into 2094. If VIX takes this path to the downside, very likely we'll see some upside in SPX. Cool. Let's move into live trading.